the largest LNG facility in Qatar was hit, and the Qatar Energy CEO told Reuters that some 17% of that capacity could be offline now because of the damage, and that it could take 3 to 5 years to repair. So for more on this, we go to Mike McGlone, Bloomberg Intelligence Senior Commodities Strategist. And Mike, obviously, we've talked to you a lot about the near-term versus longer-term case for oil and natural gas. But if we're talking infrastructure damage and capacity that may not come back online for that long, that far into the future, how is that changing your thesis, if at all?
It's sticking with my thesis, Kayleen. Key theme here is the longer this lasts and the higher prices go, most notably crude oil, you mentioned natural gas, it's more of a problem for the rest of the world, the more likely this energy crisis is going to tilt over to a global recession, and did what it did in 2008. Just key thing to remember, crude oil peaked at 147 in July 2008 with CPI at 5.6%, and the end of the year down at 32, and CPI bottomed the next year at -2%. That's what I think is happening. That's what traders get. And you're starting to see that little bit in the long bond. The long bond yield's starting to tick down today because it sees an end game. And you're seeing that with metals collapsing. This is starting to show the deflationary, recessionary forces from this energy crisis.
Wow. All right. I want to hear more about that, Mike, because you're right. Metals are falling out of bed, and so are mining stocks. We're looking at gold right now down over $300 an ounce, or 6%, just below 4,600. The headline on the terminal: gold mining stocks set to erase 2026 gains as rate cut bets fade. There's more at work here than Iran, it sounds like.
Well, absolutely. Copper did it. Silver did it. Silver was up 63% in January. Now it's down almost 3% in the year. This is just getting started. And the reason I say that, Joe, is my key theme still hasn't happened. If you look at 60-day volatility on the S&P 500, it's still down on the year, despite what's happening. So to me, that trickle up from all that massive volatility in crude oil, in gold last year and crude oil this year, it's very rare not to go to the stock market. Right now we're seeing wobbling. And I think that's what the market's starting to worry about, is this triggering what it did with 9/11. It triggered the acceleration in the downward trend in the stock market.
Well, it's interesting. Just quickly, Mike, we've got gold down for a 7th session. What happened to buying gold in times of war?
Well, that wasn't me. Gold told us. Gold, the time to buy gold was last year. Gold preempted this. Sure. Gold warned us. And gold was it was front ran it. And now that it went up, gold's looking forward to that more secure future when Mr. Trump by midterms was going to say, well, Iran and Russia have lost Venezuela, Syria, Iran, and potentially Cuba. It's looking forward to the opening of the Strait of Hormuz, and potentially maybe we've reached as bad as it can get.